Hi guys, thanks for tuning into another episode of Nuggets News. We're back with our weekly crypto news update with Michael, who's head of written research over on the website, pumping out all that great content and research for us. And we had our VIP Christmas get-together drinks last night. That was very fun, Michael, wasn't it?
It was a good crowd. It's growing. The Nuggets News community, the VIP group, is like it's full of really interesting people as well. Like everyone's got a story, and yeah, good fun.
And most people are kind of joining because they see the way the world's heading and just want to talk about stuff every month when we catch up, rather than so much just chat crypto research. But no, interesting times. But what have you got for us this week in terms of all the crypto news?
Yeah, it's a pretty quiet-ish week as far as like crypto news goes, but there's a lot of FUD in the timeline. But it's good to see in the last sort of 12 hours we've got a little bit of a bounce. I think I saw Bitcoin get down to 85. I believe, in the last sort of 48 hours, but now sort of back up into that mid 92 range. It's always funny because you always think, okay, alts are just so beat up here. I'm going to jump on some alts, but it's always Bitcoin that does the best. And obviously, like Solana's done pretty well here in the last sort of 24 hours at 10%. But where we're at right now, I still feel like it's just great opportunities to just keep nibbling. So like I nibbled a bit of Bitcoin on Monday morning. I got a bit of ETH. I probably should have just gone all Bitcoin, but I, wanted to add to the ETH supply. I dabbled in a tiny little bit of Sol, just because I'm just trying to like rebuild up these positions that I've been sort of scaling out of, especially when we're going to have these like volatile moments, just trying to train my brain to buy the fear. That doesn't mean we're not going to go lower in the, pre-Christmas the rest of this year, but just trying to buy on these dips.
Yeah, probably just chop around into the end of the year, but so all our data looks pretty bullish for next year still, so that's good.
Well, jumping into the news, so we had our annual Tether FUD sort of come out at the moment. So it turns out that Tether's got about 7% of its cash reserves in gold and about 5% of it in Bitcoin, but all up is about 104% collateralized. But then they've had this whole issue like pinged on them about whether they're solvent and if they could handle like a 30% drawdown or if that would make them insolvent. So, cue the sort of the Twitter FUD machine. Where does it leave Twitter? 50% of its reserves compared to commercial banks. So that's kind of like been the timeline at the moment, sort of that annual sort of Tether FUD. But for me, this is a non-factor. It pops its head up every 6 months, every year.
And for people at home, those commercial bank reserve requirements have just been changed over the years with fractional reserve banking lower and lower to the point where basically a few countries, the central bank said to the banks, look, don't even worry about it. If you ever have a bank run, lots of people trying to withdraw, like we'll just, fund that liquidity. You don't have to actually worry about reserves. So this is one of those things where it looks good on paper. I understand what they're saying. Oh, it's not fully backed, but the central bank, if you've actually got assets, and the central bank is going to step in and print that and give you that money, so they don't see banks blow up, unless they want to deliberately blow up the banks to usher into CBDC or something crazy like that.
Yep. So obviously, MicroStrategy and the MSTR stock at the moment is trading below its NAV, its net asset value, meaning that all of the shares are actually now worth less than its actual holding in Bitcoin. And so this announced, they just recently announced that they were even considering the possibility that maybe they might have to sell Bitcoin to, I guess Michael Saylor softened his stance on it. He said that he would never do it, and he stood on stage at the Bitcoin conference and said, never sell your Bitcoin. But obviously they've got investors who are not maxis, and so they need to obviously show that they're a bit more fluid. And he did show that fluidity, which kind of caused a little bit of fear in the market. But then they announced that they're sort of buying again. So they're always the punching bag now because they were the first of these DAT companies, and now everyone's sort of super suspicious of the DAT trade, even though he was the first, and everyone thought he was, had invented fire when he first started coming up with this strategy. Yeah. So again, more FUD on the timeline, but. Michael Saylor, he's still the one who's driving most of the Bitcoin purchases. So Ethereum this week is kind of about to have its next upgrade. And a lot of the stuff that is coming just shows that like Ethereum keeps to iterate. And I do really like the sort of the messaging coming out of the Ethereum Foundation at the moment, because they have sort of said that they're going to focus towards that privacy solution, and that it's unacceptable that if you walk down the street and someone says, hey, can I borrow $10, and you lend them $10, and all of a sudden they have a detailed record of your full financial history. Like no one would accept that in day-to-day life, but we've been forced to do it inside of blockchain up until this point. And so now the tech has gotten to that point where they really want to start to address this. I don't think that there's going to be a huge amount of that in this particular upgrade, but it just goes to show that they continue to iterate. And I do feel like the whole first mover advantage and the sort of the market that they've captured means that it will never fail. Like everyone has now said it for 3 cycles that if ETH will get flipped by X chain, it's old tech, and it still has never happened, and it still hasn't even come close to happening. And so I would think that those narratives are put to bed, and like that's why I continue to stack Ethereum. I still feel like it's going to be here forever, and they will continue to show that they will continue to iterate. So if they get left behind in some particular tech, and we'll talk about what the market's reaction was to new L1s in a second, but I do feel like they're here forever, and is pretty blue chip.
Yeah, I just feel like they need to focus on that one product that's going to gain actual real adoption and get out there. It's all, it's great with these upgrades and making layer 2s faster, but if people aren't really using them by now, we need to see this in the next 12 months, I think.
I think that they've sort of yielded and relented to the fact, and I don't think Vitalik wanted to. He didn't want it to be this way, but they've just accepted the fact that they're a financial layer. It's what it is, and it's what it always will be. Like, it's just going to be that as more and more and more of the financial system will move on to Ethereum, RWAs will move on to Ethereum. Like the RWA volume at the moment on Arbitrum is actually really high. And so I imagine that this will continue. And while they wanted it to be something more than that, and like we're going to have this mainstream internet on this world computer, I think it is the finance layer. It's what it's always going to be. Mega ETH, again, there's been a heap of fight about this one. It's just like another L2, but this comes out for its mainnet this month as well. And so if you haven't already played around, you probably can go dabble and see. There might be some sort of airdrops involved in that, but I know there's a lot of fatigue around this at the moment. And I actually will just jump here because this kind of is a little bit timely because we talk about the L1 trade, and I've mentioned Monad and how it was a hugely valued private round and seed round that happened. And it's now 1 week in to its launch. And this is the founder of Monad right here responding to Arthur Hayes. Pretty much, Arthur had been putting out some fight about Monad, and they pretty much just had this big sort of apologetics piece saying why Monad is amazing and how it feels like magic because, you can withdraw from Coinbase and 2 seconds later it appears in your wallet, and it's so lightning fast, but it's all EVM and everything works with it. And Arthur's response is just crack up to the high FTV, low float narrative. He's just like, look, your tech is probably amazing, but I couldn't care less. Like, your tokenomics pretty much guarantee you're going down 90%. So unless you can have some sort of miracle where the market can absorb another 90% of your supply in the short term, your FTV is just so high. And so there was a really cool back and forward right here. It was very interesting. Go have a look at this tweet if you want at Q&A HD. But the market has just got no appetite now for new L1s. Like we're just so saturated now. It's
or just proof of stake chains. And if you're paying stakers and you're paying ecosystem project wages in your own token, there's just no buyers like to sell that pressure, and it's just down only. That's what I'm saying. Unless we start to get apps that have a real use case and are producing real fees that are getting burnt or going to buybacks or whatever it is, it's just we need real world use cases, or alts are going down only.
We spoke about this last week as well, how there's a bunch of projects now, DeFi projects, that actually are revenue positive, and they have now relented to the fact that they can't just pocket all those yields and they need to actually put it into buybacks. And so there was several of them, and Uniswap finally is going to be one of those. And so DeFi applications and the application layer has to be a revenue share. And I think Arthur Hayes has been the one who's driven this the most. He's like, if you're making money and you're not sharing it with token holders, like you can get wrecked, like get lost. So either share your revenues with your token holders or, become redundant. It's up to you. Jupiter is one of these. So Jupiter and the Jupe token has always been one of the most highly lucrative applications. And at the moment, they've got, more stuff happening. They've got a launch pad now. So effectively people will be able to ICO. So they've moved away from this whole meme coin thing, and actual legit projects hopefully will be able to ICO there. So again, a lot of volume will be here, but I just don't feel like the market is the right time for this. But when it does turn, that the traders will be here. This is where the pump and dump stuff will move to.
Yeah, and every time you think crypto might have grown up a bit, you look at the names there of the tokens, DTF and WET, and it's just like, oh my God, it's still such a large casino. Yeah. Yep.
Still children who are no longer child age.
Yes.
Interesting one, which I don't often talk about, is Cosmos. And so Cosmos, prior to the L2s launching, was the alternative place to Ethereum. Like if you wanted to come and spin up your own chain, it was where everybody went. And there's some really great projects who have used the Cosmos SDK, like ThorChain, which we've always sort of been a bit of a fan of, and what JP's done. But effectively, I think they've sort of relented and given up and sort of realized that no one's going to use them for that narrative anymore. Like no one's going to just come and continue to use this SDK and have more and more and more and more L1 sort of coming out into the market. And these guys sort of differentiated a little bit from the Polkadot model, where Polkadot model was, and I'll talk about Polkadot another day because they've got their own issues. But this was a different model where in Polkadot, you had to use the Polkadot network for security. And so that whatever the token price was, $10 billion or whatever, you used it for security. Where in Cosmos, you just spun up a chain and you still had to provide your own validator set. You still had to pay your own, validator fees in your own native token. And it was just this network of chains that were all compatible with each other. And it had no sort of value accrual to the Atom token. And so what they've done now is they've come up with a whole new economic model, and they've had to completely reboot this. Now, whether this is successful, I'm highly skeptical. But effectively what they want to do now is they're just a B2B platform. They're just going to go to businesses and try and convince them to use their tech and buy back the token. And so you can see that value is going to accrue up. If you didn't catch my drift, I'm pretty bearish on this. But it just shows that the value will accrue to like the large cap existing time-tested protocols. It's why like we're still way over heavy Bitcoin, and we chase the sort of the opportunities in like yield generating products. But this is just shows the sign of where the market's at. That this was a blue chip project. Everyone loved the Cosmos SDK, and this is the road to redundancy, if you ask me.
Yeah, I mean, it's just wild what all these big projects with how big the market caps were and the ecosystems, and everyone just thought they were going to go up in a bull market, and it's been a real learning lessons for these projects. And again, hopefully we can get through all this and have a bit of a renaissance for the builders. But yeah, for the time being, it's all about TradFi still and that money flowing into Wall Street.
Yep. So we just play the game. We keep playing the game. You protect capital. You look for opportunity. You buy dips. Play it safe. And then when there's an opportunity to speculate with a small portion of your portfolio, you may choose to do so. But yeah, you need to still be defensive and not just casino it. Otherwise, you end up poor.
Absolutely. Well, thanks again, Michael. Guys, you can head over to the website for the free newsletter, all our crypto research and analytics, or our VIP high net worth services. And we'll chat to you again next week, Michael. Cheers.